Good morning, everybody. Welcome to the morning meeting of the ARMR Report. Thanks for joining me. We're going to jump right into how we're going to be looking to day trade, how we're going to look to invest today, any changes that we need to focus on. So diving in, this is how I run my own personal capital. It's the ARMR investing way, just to remind you guys. It's a process of doing fundamental research. We call that the whiteboard, using algorithms to direct our risk on, risk off decisions, and using stop losses to protect. So first thing I want to do is look at the day trading process yesterday and get ourselves ready for today. Then I'll dive into the market generally for investing purposes. So we're going to look right here at the NASDAQ and see what that looks like, that gap up this morning. But before I do that, let's just look at the S&P. While we might trade all kinds of assets, we're going to look at the S&P just for what the process was yesterday and what it means to me. So let me just blow this up for you. Okay. And we'll take a look at the S&P. So here's our 3-minute chart of the S&P. And here are the day trades that showed up yesterday on the long side. Okay. So first thing I want to say, and of course, this was the day trade on Monday that we captured, right? So what you're noticing here is you're seeing trades in the afternoon. So the first thing I want to say is risk monitor still red, positive gamma now. Investors Business Daily has been, bullish for the last week or so. So more of a bullish tone to the market. Volatility is still high. So when the risk monitor is red, volatility is still high. What we're seeing is we're getting a couple of trades a day. I've said in the past that my favorite time to trade is between really 10:30 and 11:30. Okay, so this is my favorite trade, right? Market opens, market goes down, market sets up a base. We buy one of our 5 triggers, we make money. Okay, that's my favorite trade, and it usually happens in the first, really the 10:30 to 11:30 time slot. Every now and then I'll put a trade on at 10, but normally it's the 10:30 to 11:30 time slot. If we're risk monitor green, we're positive gamma, we're in an uptrending market that's been rolling along and volatility is compressed, then the trading's a bit different. There's no afternoon trades. You're buying VWAPs a lot. You're not getting that crazy Ivan move away from the mean back to the mean. What you get is trades right around the mean that extend. Okay, and so yesterday was the first sign of that. If you look at this trade yesterday, we opened flat from the day before sell-off at the end of the day, put in a double bottom right above the ARMR moving average, which is right here, and that was the buy bar. Now, what we did on our trading desk, you could have bought the market right here, and what we were doing was buying a bunch of different stocks. Microsoft, Illumina, we bought Roblox and Unity. We bought some Deere. I mean, we were doing other things, but you could easily be trading the right there, that entry point, and the same thing showed up on the NASDAQ. Rally right up to key gamma location where the market put in a top for the day, for that time of day, right? And the market sold off. And in here we were short a little bit. Remember that? But what I said to you guys, we covered that short real fast, because what I said to you is, look, as long as the market is still in the uptrend, which is trading above VWAP, it's a bullish day and you don't want to get caught short. That was incredibly important. So what we did was we flipped long right here, and we literally got long on this bar. We didn't wait for the end of the bar. We were getting long as this bar was being created. Okay. So we had a real nice run to the close, and we had two opportunities to trade the indexes right here and right here. But the key about this day to me is that this is a very bullish type of day, and we haven't seen that in a while. We saw a double bottom at VWAP that didn't extend lower, so we had to buy the VWAP, and we saw support again at the VWAP, leading to another rally. Okay, so that's a more bullish market and something we haven't seen in a while. So let's mark that down. It's just one day, but it's led to a big gap up this morning, which is not a surprise. And I was talking to you guys on the live trading desk at the end of the day yesterday, and I was saying, geez, I should hold my Microsoft. I should hold these stocks because we're probably going to get a gap up tomorrow morning as we go from negative to positive gamma, and we have a day like that on the trading side. So now here's the gap up. So best times of day to trade right now, 10:30 to 11:30, and I think that setup was 10:30. That was right around 10:30. 10:45 was. You could have bought the 1036 bar right in here, but really this is the bar to me that you're buying. Maybe the bar before it, because you pop above VWAP, consolidate for a bar, and then start to go up. When it takes out the high of that tail is when I would be getting long the market, which we were talking about that on the desk. So 10:30 to 11:30 is the favorite slot. If we see a setup, then we trade it. So for those of you who are new to this, or you don't want to trade, you don't want to overtrade, you just want to trade the best setups, then what you want to do is we share all of the setups with you on the live desk, and you watch it as it's happening. What you want to do is focus on the 10:30 to 11:30 slot. When you see that setup, those are the trades to put on. They have the highest probability of success. Then later in the day, it's the 1400 to 1500 time slot. I'll use military, time. Maybe that'll help everybody. Obviously, it's 2 to 3 o'clock, right? So it's 2 to 3 o'clock New York time, since we have friends all over the world in all different time zones. To 1500 Eastern Standard Time, 2 to 3 o'clock. All right. So that 2 to 3 o'clock window is just like the 10:30 to 11:30. When you see those setups, you want to hit them, because they're the highest probability of success. Okay. And so what we see right in here is this is happening right around 3 o'clock. So, what I wanted to share with you, what did I say? It's 1400 to 1500 hours, right? The 2 to 3 o'clock slot. Don't forget, when I make these time frames, 10:30, 11:30, it doesn't have to be a trade that happens on the exact bar. It's that you're looking for the right structure in that time zone, and then you're using whatever the trigger bar is, those 5 triggers that I share with you. When we see them, we trade. It's okay if it's 10:39. It's okay if it's 3:09. That's fine. It's around those numbers that matter to us. All right. So we'll be looking for those day trades again today. My posture this morning, gap ups are not something I buy and chase from a day trade, especially when we're up over 1% on the morning. So no interest in chasing that. Weakness off of the open, that's something I might buy. Okay. Wanted to show you real quick, and ARMR Insiders, you can, scroll down and find ARMR Chart Diagrams Day Trading Playbook. This is on the website for subscribers. You can go in there and find this, okay? So you scroll down, and the Friday rip, and what I try to do is just show you the, 1, 2, 3 step process of how we put the money to work, how we day trade, all right? So let's just scroll down for a second. I'm going to go to the short side, just so you can see a short setup, okay? Gap ups that can't extend. That's what this is right here. I'm going to blow this up for you so you can see it better. Okay. What we want to, if we're going to put a short out in the morning, see the market was down here, gaps up, tries to go higher, can't get above the opening range high, and breaks back below VWAP. That's a short opportunity. Okay. Now, this particularly was a real negative day. We were below the ARMR moving average. Okay. We had a terrible down day the day before. So that was an easier short. This is going to be a little bit more tricky today, since we're in a positive gamma setup. But here's another example. Gap up. Both of these, by the way, are below the ARMR moving average, and they led to like massive selling. Okay. So here's another example. Gap up. See, the gap ups set up the best shorts. So it gaps higher, tries to get above the ARMR moving average, sets up a top all morning. It's the break back below VWAP where you get short. So the takeaway from the ARMR day trading playbook, the takeaway is that if a gap up stalls and then breaks below the VWAP, the first trade of the day for us will be short today. If the market gaps up and in the first half hour immediately sells off, that's different. That'll open up an opportunity for a long trade. That's actually healthy. Gaps up, challenges the gap, sets up a long trade between 10:30 and 11:30, and boom, off to the races. That will be a long trade. But if it gaps up, tries to go higher in the first hour or two and can't, and breaks below VWAP, that's the short trade. Okay, so that's how we'll be day trading today. Now, let's move over to the market real quick. You all have been listening to the last couple of days. I've been sharing my thoughts, and one of them is I thoroughly expect the market to attack the 50-day moving average. Okay, so looking at the NASDAQ here, we're below the 200, we're below the 50. The first breakdown of a major uptrend usually is followed by a really spirited rally trying to recapture. So a test of the 50, a test of the 200, total sense, makes total sense. That, in fact, if you look at the Fed tapering market in 2015 and 2018, you'll see very similar patterns where you have the first breakdown followed by a ferocious rally back to and actually above the 50-day moving average for a day or two, and then a reverse right back below it. So how do you trade that? How do you invest in that? First of all, we're risk monitor red, but we are heavily invested in the stock market, right? We're like 70% long or more in our portfolios because this is a commodity year. So we're willing to buy stocks that are not NASDAQ 100 or ARC type of investments right now. And that's where our portfolio is. And that's why ARMR portfolios have alpha this year. Okay. So the question for us at this point is, do we want any NASDAQ / ARC type, innovative type exposure? And while I look at 2015, I look at 2018, and I say this is a classic counter trend rally in a bear market as the Fed's tapering, and it's going to attack the 50-day. I don't have a crystal ball. I don't know that. How do I know the Fed's not going to come out and say, hey, you know what? We decided not to taper. The market will be skyrocketing, and we're going to want a piece of the Qs and the innovative type stocks. So there's nothing wrong with putting some money to work before the risk monitor turns green. You just have to recognize the type of market you're in, and you have to be very disciplined with your stops. Okay? So I expect the market to extend to and through the 50-day. It'll be what happens next that matters. So if we break through and it looks like a great breakout and then reverses in a day or two, you got to respond. You got to read and react. You got to stay nimble. You can't argue with it and say, oh, I think I got some great positions on. Let's see what happens. This is a market that'll kill you. You can't do that. So if you want to play now before the risk monitor changes, that's okay. I do it too, right? But you just have to understand the risk that you're taking and how to manage that risk. That's all. Okay. So, top stocks that I would look at if I decide to get some, exposure to the portfolio. With that, I managed many different portfolios, right? So I got 4 portfolios. I take my capital and I split it into 4 separate portfolios. And what I try to do for those I manage money for, what I try to share with you at the ARMR Report is to say, here are all the things I do. Find a structure that fits your approach. We have a dividend portfolio. It's been the best performing portfolio of the year. Okay. We've got our index only portfolio. It's been in cash all year. It's not doing anything, and it won't change until the risk monitor goes green. We have a portfolio that only invests swing trade, day trade, index ETFs, doesn't buy individual stocks, right? And so that's going to carry a lot more cash if that's the strategy you follow. That carries a lot of cash every day because we're day trading it. And then we have our traditional portfolio, and that's where we have all of our individual stocks and our ETFs. We've got all of our commodity exposure, and that's the portfolio where I might put, which is got about 20 to 30% cash in it. I might put that cash to work in NASDAQ, innovative type of stocks. I'll give it a shot, right? And so These are the stocks that I'm looking to put into that portfolio if I was to do something. First of all, Microsoft's going to top the list. Already had the earnings announcement out of the way, showing wild outperformance versus the market, holding above the 200-day. It looks great. It's an easy entry point. Okay, Apple, easy. This is leading the whole market, right? I mean, it's above the 50 and above the 200. That's the strongest stock in the market. That'll create alpha right there. Okay. I want to own shares of Illumina in front of the earnings number. Now, there's a lot of risk on that. Okay. There's a lot of risk owning something in front of earnings. This company's already pre-announced much better than expected results and what they think will happen in 2022. They're raising guidance. Okay. They did that last month. Stock was up 17% on that news. Then the stock gave it all away because the market got wrecked. So it's trading right down near its lows of this channel, as you can see on the chart right in here. Okay. They're going to announce earnings tomorrow. So, I mean, I don't think that it would be shocking for them to come out and say something negative less than a month later about earnings and what they expect 2022 to be. They said on the JP Morgan conference last month that they're going to add more information to this bullish picture at their next earnings announcement. So we know they're going to talk about how strong 2022 should be and all of the things that are working for them. The risks obviously have to do with Grail. I think that's already in the stock. That's why the stock is down this much. Okay. So they took over Grail. The equivalent of the FTC in Europe is suing them. They're in this legal battle over Grail, blah, blah, blah. Okay. That stuff usually works itself out. Once the bad news stock gap down up here, okay, once the bad news is already in it, generally it's just a long, drawn out legal battle because government bodies want to, get a payoff, right? They want to just basically steal money from innovative companies. And so they're going to, harangue and wrangle and do all these ridiculous things. And eventually there'll be some fine and a payoff and we'll all move forward because some government official gets paid. Sorry, is that a little too much vitriol this early in the morning? Anyway, so, I mean, could they say something negative on the call about Grail? I mean, there's always something that could be negative on a call. But the flip side is stocks that are down big into earnings where everybody knows the negatives, they generally have an opportunity to rally. Think Amazon, right? I mean, take a look at Amazon stock. Amazon stock had sold off from the highs and was actually breaking down below this huge top. It looked like a disaster, right? And then the stock skyrockets on earnings. And not so much because the earnings were something, heroic. It was just the stock had already sold off hard into the news. The news wasn't worse than anyone thought. Shorts had to cover. There were some highlighted bright spots, and the stock was up a lot. So I look at Illumina as a situation like that. And while I'm not willing to buy Amazon in front of earnings because the market was imploding, it was risk monitor red, it was a negative gamma environment, and I don't particularly think Amazon's a great investment. I think Illumina is a great investment, and now we're in the right market for this. So I'm going to own this stock into earnings. Feel free to join me. But your risk tolerance and your goals are something I can't possibly know. Okay? So take responsibility for your own actions. All right? You make money in Illumina, pat yourself on the back because you made that right decision because it fit your approach. All right? Couple other ideas that are on my list. I want Micron. I want Micron. Noel pointed this out. I think yesterday, made me look at it again. Thanks for reminding me. Here it is, right back on the 200-day, right at the 50-day. This is a stock I really want. So if I was going to do semiconductors, it's going to be Micron and it's going to be NVIDIA. Okay, that's just a nice pullback to the 200-day, higher low, higher. It looks just like the NASDAQ 100. I think that's a stock I could own. So those are some of your top NASDAQ 100 names. Now, here are my favorite innovative type of names. Okay, I'm going to tell you right now, we added Roblox to the portfolio yesterday. It's a starter position. I would like to add more if it actually broke out of this bottoming wedge. So I'd increase the position if it breaks out of the bottoming wedge. And we added shares of Unity. When we were on the Unity conference call yesterday on the live trading desk, listening to that earnings announcement, these two companies are the two best ways to play the metaverse, period, hands down, at this moment in time. There could be other companies that come around. I'm sure there's other names, but these two companies are just pure play metaverse stocks, that quite frankly, I think could be acquired. I mean, when you listen to the Unity conference call, to me, it sounds like owning like Adobe when Adobe first got started and totally revolutionized, the photo enhancement or whatever you want to call it business. I mean, what Adobe was to that business at the start is what Unity is right now to the metaverse. That's my opinion. And I mean, Adobe's made people, a lot of money. So I think at some point, Unity is going to go on that type of a track. We're way early. These stocks are down huge. I don't normally play with stocks that have a downtrend that aggressive. There's huge amounts of overhead. So these stocks are not going to get away from us. And these are just positions I've put on because I'm a big fan of the metaverse. The stocks are down so dramatically from their highs. They're right down into bases and they're making bottoming wedges. They break down out of the wedge, I'm out. The position size isn't big enough to hurt me. They break out of the wedge on the upside, I double or triple the position, raise my stop, and see if I'm onto something. That's how I'm attacking those two positions. I would add Trade Desk. I haven't bought it yet, but it's one of my favorite names in the innovative space. And don't forget PSTG. This stock is got wrecked because the innovative stocks are getting wrecked. But this is a tremendous stock. You got to go listen to the conference call to understand what I'm talking about there. So that's got to be at the top of our list. And if you're looking for a cybersecurity name, I think Datadog is the way to go. Not my favorite pattern. So, but those are just some names for you all to consider. If you want to put money to work before the risk monitor changes, which there's nothing wrong with that. The risk monitor is a guide to help you understand the goalposts of where you are. Doesn't mean you can't put some money to work, see if you can make money. But when your risk monitor red, you have to really, really adhere to stop losses. You have to put position sizes on that are not going to be so large you can't handle volatility. Risk monitor green, positive gamma, IBD bullish, markets grinding higher. That's a market to be more lenient with your stops, to have bigger position sizes on, right? So what risk monitor red's telling you is very dangerous market. It could be the beginning of a whole new uptrend. That's always true. When you risk monitor red, you're right around the corner from a buy signal. So if you want to play in that arena, you can do it, but just don't forget where you are. Manage your risk first. ARMR report, algorithmic risk management research. Manage the risk, then capture the upside. Have a great day, everybody.